All right, so it looks like the market is going down pretty significantly, at least on my portfolio and possibly some other, tech focused investments. So let's kind of go ahead and take a look at what is going on, kind of talk about some of this stuff. If we look over here to the right on my actual stocks that I own, everything is in deep red. We got stuff going down like 18%, 8.5%, 15%, 12, 10, 13, 6, and then even 11% down here. So we got a lot going on here. Let's kind of talk a little bit about this, kind of what I'm planning on doing. Obviously, this is my portfolio, so it might be different than yours, but I wouldn't be surprised if a lot of people are seeing this huge drop, especially if they are pretty tech heavy in their portfolios, which I think a lot of people might be at this point. The NASDAQ future, as of right now, is about 1.83% currently. But again, that is going to be very dependent on every single person's portfolio. I also have a long-term investing portfolio, which right now, as of Monday, went down $322. The last week has been down $664. And then in the last month, it's actually down about $500, obviously because of the ups and downs in the market. So got about $22,000 in my long-term one. You can see here just over time. Cool thing is, for those who are kind of like, whoa, that's a lot, I started off with about $100 in this portfolio. This is with M1 Finance. This is probably my favorite platform that I use. And then with my Robinhood, right now we can see here in the last week I'm down about 17.5%, and in the last month I'm down about 7.16%. So, why do we want to talk about this stuff? I think it's important to showcase when things are not doing well on a portfolio just as much as when things are doing great, because I think if we only show the good stuff, it's not going to be as easy to understand, and kind of go through the process of the market being down. I think a lot of times when people see like all this red and the market going down like this, they start to really freak out. They start to sell their stuff, right? Like you can see this huge drop off because before the market, where was it? Let me actually go to the individual stocks. So like if I go to Tesla here, so before the market closed after hours, it was at 717. Now it's at 660. So huge discrepancy as far as like this, just a massive drop off. So people might be selling. They might say, hey, Tesla's in a bubble. It's popping. We had another big one, which if you were following along before on the channel, we were looking at CCIV. Been hearing a lot about it, so I kind of had it on my watch list. Check that out. Look, so before, when the market closed in the after hours, it was at 57.88. Boom. It's down to 35.50, which is a 38% drop. This might actually be a really good price point now to get into at $35. So we might actually buy that. We'll see. So the big thing here too is like, okay, well, is the market going to keep on going down? Like, is this going to be, because what is it? The last week it's kind of been down for the most part. So we say, hey, like, do we keep buying in? Because I was buying in the other day. I think I bought in like earlier or late last week as well too, even though these stocks are constantly going down. So I know that I don't have a lot in this portfolio, but I feel like it's still good to share with people because most people here on YouTube probably have like tens of thousands, if not hundreds of thousands in their Robinhood account. So hopefully this helps knowing that not everybody has crazy amounts. This portfolio, just for context, is a little bit more of my risky stuff, where my dividend investing portfolio is a little bit more on the safer side of things, more for like the long-term stuff. So just kind of giving context between the two, but hopefully that kind of helps you guys out, knowing that like this is a smaller percentage of my overall investing, plus not even including my retirement and other stuff. But, like I said earlier, we got stocks down here, like our space stock right here. It's down almost 15%, right? Like pretty significant drop. Now this one, my average cost is way lower, so I'm actually still doing really, really well with this stock. So we may or may not buy more into this one currently, but I got other ones here. Like if I go to my ARK right now, so the ARK ETF, it's heavy into Tesla. So of course it's going to be down if Tesla's down, just because it's going to weigh it so much. My average cost is 130. It is currently 133. So right now, even though it would be increasing my average cost, it'd actually be pretty beneficial considering where the ETF can be over the next little while, if I still believe in it long term. So, sometimes people freak out, well, look at that huge drop. Is it going to keep on dropping, or is it going to, steady out? So doing what I do is called catching the falling knife. And that is, if I invest into this today, right? If I put in, I'm not putting a ton, right? But let's just say I put in like $20, right? Obviously that is going to buy into the stock at that price point, but because it's fractional shares, I'll buy fractional pieces. That's what I can do. And if that's what all you can do too, good. Like, go for it. Like, invest what you can. But then here's the really cool thing is if the next day, actually, let's just say this price goes down even more. So let's say it goes down to 120, right? So it goes down another $14. Well, heck, that's great. It's lower than my average cost. Maybe I'll put in another $20 if I can, right? So then people are like, well, then why did you put that first 20? Why didn't you wait and then just invest $40 when it's at 120? Because it's a better deal. Well, yeah, that is a better deal, but we just don't know, right? There's no like indication that it's gonna for sure keep going down. I mean, heck, look at what happened last year, right? The market was just going down for a while, and then it just made like a straight up V and it went right back up. And so there was not a lot of opportunity for people to buy on the bottom for a long time. But here's a really weird thing, and I was kind of just looking at this the other day. Actually, not the other day, just now. Right over here, let me get my marker. So if we look at the date, if let's say the market keeps going down, right, like it's going to keep falling and whatnot, it was the 19th of February of 2020 when everything went down last year. So like right here. So you can see, if I can't zoom in on this too much, but like right over here, you can see there's not a lot of time for that bottom hitting. But what's even more eerie is that this is right now the market going down with tech is happening almost exactly a year since the market went down as a whole. So we'll see what happens, because sometimes one sector can possibly bring down all of the market overall as far as average, because we saw there on the NASDAQ futures, it's down 1.64, which is not a crazy amount by itself. So maybe it won't affect the whole market, but we could see, even the Dow and the S&P are all, down just a little bit there too. So, is your portfolio is looking like this, like all this red too? Let me know in the comments down below too. Like, are you somebody who kind of freaks out and starts selling? If that's your case, obviously that's your choice. I personally like to hold at minimum if the market's down, but personally, I like to keep on buying. So if you are somebody who likes to keep on buying, let me know that too. Are you somebody who waits and then buys when you feel like it's the bottom? Because I have a good suspicion that like if the market is dropping the way it has been like over the last week, at least let me close all that off. At least for my portfolio, I'm down about 17% for the last week. If it keeps on dropping, if it keeps going like this, I can see it going on possibly for another couple days, but I'm not going to risk at the idea that maybe everything shoots back up by, the beginning of the next trading day. So why miss out on the opportunity of buying something at a discounted price, right? Because like right now, if I go into my Zoom stock, it's trading at 372. My average is 459. So buying into this lowers my my dollar cost average, which is also known as DCA. This will drop pretty significantly if I buy more in. Granted, I don't own a lot, but again, I like to show this because I think it helps other investors that are either just getting started or maybe don't have a lot to actually invest at any given time. I have other stocks that I'm doing very, very well with, and they've been performing pretty well. Like I have Carvana. I'm up technically, even with the market down, 36% on my money. So, I have about 43% of one share, but you can see here that with its current price drop, where are we at over the last month? So last month has kind of been flat, right? So nothing has really changed as far as growth. So for me, I'm like, hey, if we buy now, that's a good price point, knowing that if it gets back up to its highs, that's going to be some really nice growth. Same thing with like Twilio that I've had for a very long time. So with Twilio, I'm also up around like 36%. Same thing, current price point is 409. And where have we been? Last week it's been down almost 6%. It's actually up still for the whole month, but seeing that it's at a lower price point, maybe I can buy in. Sure, it's going to bring up my average cost, but might as well get into it. But who knows? Again, tomorrow it can go down even more. And if that's the case, then maybe I'll buy more, or maybe I'll just hold and say, hey, I still got a good price point, and then the market will eventually go back up, or hopefully goes back up, and then one day I'll obviously be in the green for all of my portfolio, and then that way I can either continue to keep buying more in, but at least at some point I got at a really, really good price point. Because again, look at all this. That is all red in this portfolio. If I actually look in my long-term investing, so in the last week, I've had a few sectors, actually in the last month, you could see here. So the last month it's been a little red here as well, but I've had a few sectors overall, like my financials and my real estate, that are actually currently in the green. And then I do have individual stocks, like I have Google that's currently in the green by itself for my growth sector there. Right over here, I got Ross that's currently in the green over the last month too. So obviously being diverse and having multiple stocks will obviously give us the opportunity to hopefully not be down as much as if we were heavily invested in like 1 or 2, 3 companies or something like that, which is why my long term, I have about 27 stocks here that I am currently in position with, where my Robinhood, I have obviously significantly less, but these are also much higher risk, which is why I have a lower dollar amount, because it's a smaller portion of my investing. And if I lose all this money, so be it. That would be very unfortunate, but not something that would, put me in a really financial stress kind of thing. So for me, this is more about just kind of figuring things out with, my risk tolerance, wanting to go in, obviously something like Airbnb. Right now I'm still positive on my Airbnb investment. Have actually 1.32 shares, which is great. And at this price point, at 182, I might actually be interested in buying more because, it was starting to get pretty up there, about 218 or so. So not bad. So I might actually be investing more into this as well too. But again, it's just all a matter of what we want to do and how we want to go about it. So for me, I'm going to be hopefully trying to invest a good, healthy amount because of how much of a drop this is. When the market's doing well, I'll kind of have an average that I deposit every week. Usually, I think I'm going to be doing about 50 a week in Robinhood. And then in M1, I've been doing 250 or so. But when the market's down, I tend to buy more. So if you look here, so I bought it in about 300 yesterday, and I'm putting in at minimum another 150 in this account just because the market is dropping the way it is. So every time the market goes down, I tend to buy more. Every time I see red, for me, that's just a sale. That is just a good time for me to buy more stuff. Now, again, whether I'm already in the green overall, like I am with, the space stock right here, I'm up 95%. So my average is for sure going to still shoot up. But if I think that company is still going to relatively stay close to that price point and then go up higher, I'll keep buying. If it keeps dropping, I'll keep buying as well too. I'll just try to buy more of it if I can, not knowing where the bottom is and then trying to go back up. So, like I said, let me know in the comments down below, what kind of investor are you during this time when, markets are down, things are looking really red for you? Are you somebody who starts selling? Are you somebody who holds and waits till, you might feel like there's a bottom? Or are you somebody like myself who tries to catch the falling knife and, keep on investing regardless, but starts to increase the amount that they deposit? If you are interested in checking out M1 Finance, which is this account that I'm currently using right over here, they're currently having a $30 bonus if you go ahead and check out the link in the show notes down below and sign up before the end of February. So go ahead and check out that link. Get started with long-term investing right over here so you can get a portfolio that looks great for your future. You can start with $100 if you want to, like I did. If you want to get more in there so you can start having a huge impact for your financial future, you can also do that as well. Now, what I want you to also do afterwards is once you sign up, I want you to check out this next video right over here, because if you keep on watching with investing, I think that's going to help you in the long term to get really excited and stay consistent. So check out this video here. My name is Dennis, and I'll catch you in that next video.